Hey, good morning, everybody, and welcome. Um, it's a pleasure to be with you all this morning, and I'm always grateful that you will take the time to sign in live and listen to what we have to say. I'm going to jump right into it. I know everyone's kind of on pins and needles with all the volatility that we've had this week, and it really has been extreme. I mean, soybeans have been trading between 35 and 55 cents a day. Corn's been trading between 12 and 20. And wheat has been trading between 30 and 40 cents a day on total ranges. So it's it's just been pretty wild, because a lot of times they'll trade that entire range multiple times, right? They'll go up 15, up 20, down 20, back to unchanged, and sometimes they make the full voyage twice. And so it's like, what is happening? What's really going on? So let's take a step back and let's look at the longer term charts first this morning, in conjunction with some of the news that's going on, and then let's drill down into some of the shorter term stuff so we can maybe get a little bit of clarity on what's going on. So first of all, kind of big picture, there's a couple things that are happening. First, it's Russia, 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 right? Will they invade? Will they not? The reason that that's important is because the Black Sea region is a major export terminal, and if war were to break out, there's kind of this implied assumption that would slow exports. That might slow fertilizer exports out of Russia. That might slow grain exports out of the Black Sea, specifically corn and wheat. And so naturally, if those ports get shut down, then you would assume that demand would come here, in order to fill world supply. Now, overnight, if you overnight, Russia says they're withdrawing troops. NATO generals and the United States generals say no, they're actually building troops and increasing their capabilities. And that is as of 45 minutes ago. The Ukrainian government is saying that they have been under cyber attack since yesterday, which the news reports are saying Russia's military kind of cadence would be to attack with cyber attacks first, and then move into more um, uh, then move into full scale invasion attacks. I don't know what the truth is there. I'm just reporting the headlines as they are. We'll all know it at the same time, I'm sure. Wheat seems to be doing nothing this morning. It's just kind of sitting there. Corn's up a couple, and beans are up 11. So that's what's happening in Russia. Now let's talk about South America. South America seems to be getting warmer and drier, and the La Nina pattern seems to be remaining intact, which is supportive for our grain prices, right? Because that crop continues to shrink. It seems to be that the damage is already done on soybeans, and that looks to be somewhere in the neighborhood of 25 to 30 million metric tons of crop reduction, and then we don't know how much corn reduction that is, and so the corn market is kind of is kind of, I don't know what the right word would be. Schizophrenic's not the right word, but on edge would be the right word, because only a third of the South American crop is being grown right now in Brazil. This is their safrinha. This is their small crop, and they're getting ready to plant their safrinha crop, which is their bigger one. And so there's this chatter in the trade that because the bean crop was damaged so badly, that they're going to come back in and plant additional corn acreage. And so even though their first corn crop has probably been damaged somewhere between 7 and 15 million metric tons, which is somewhere in the neighborhood of 250 to 500 million bushels, okay, which is a huge amount for world supply. There's this assumption that they're going to come in and plant all the rest additional acres, and that their second crop is actually going to be big enough to make up that hole and increase world supply. So that's why corn is a little bit jittery on South American weather. So dryness today implies more corn acres, right? Think plant in the dust, bins will bust. So there's this assumption that South American and Brazilian supply increases because of the drought. Now, if the drought persists and they get into actual growing problems, then I think the corn market really starts to get excited. So I think looking forward in corn, you've got two weather markets that are going to be pretty dynamic. You've got the South American market, and you've got our market, and neither crop is anywhere near made. So I think you should expect more volatility in corn, and probably as long as demand stays intact and we don't have any demand hiccups, I would think that you're going to continue to see a big bid in corn as long as that weather uncertainty exists. Now, jump across the ocean and you get into the Asian world, and who knows what the truth is coming out of China, right? They do anything they can to manipulate the market, including about 30 minutes ago came out and said, we don't need 30 million metric tons of soybeans anymore. We're going to just decrease demand. And it's just completely ironic that that's the same amount of soybeans that South America just lost, right? So in order to try to manipulate prices, they just say, oh yeah, we don't need them anymore. We're gonna change food rations and use alternative sources of protein in our feed rations in order to supplement that 30 million metric tons of soybeans. Well, what are you going to do? Substitute it with corn or wheat or table scraps? I don't know. I have no idea what they're going to do. So I think the market's going to just roll its eyes at that and ignore it and move forward. All right, so that's kind of the fundamental backdrop from the three major hotspots in the world, and of course our acreage war is getting ready to really get more intense as we get ready for planting. So with all of that background, let's look at what the charts are doing. This is your weekly chart of corn. This is your continuation chart, and I can honestly see what some of the bearish traders are worried about here. Okay, you've got this 61.8% retracement mark from this peak to this trough. Okay, this is 61.8% of that. We bounced off of it last week, and we started to turn a little bit weaker. And then if you read the bearish analysts, they'll all say, well, hey, your stochastics are overbought. You don't have a lot of strength on your MACD. You don't have a lot of strength on some of these other indicators. Like let's look at the RSI. Well, the RSI is not breaking out to new highs. Okay, well, what about the force index? Well, it's not really breaking out to new highs either. Okay, I can see that, and you can even see that it could retrace. Now, given the fundamentals that we just went through, until we see a crop made, I don't think you're going to break this corn market very far. What about this argument that we're overbought? Well, let's rewind and let's come back to last October, okay, or October of 2020. Let's look at our relative readings compared to today. MACD, it's the exact same level. Stochastics, exact same level. Force index, exact same level. Well, they're overbought. Yeah, they might be, but one of the things about a trending market is that it can stay overbought for a really long time, as in it stayed overbought clear through from October to May at the same exact levels and the same exact readings. So I don't think that this is anything to be worried about, although I do see their argument that, hey, you've got a 61.8% retracement and you've got an overbought stochastic, so therefore you must sell it. Okay, I get that, right? But let's look at the shorter term stuff and see what we have to look at. So here's your May contract. And this one's a little bit tough here too, and I see what they're looking at in this chart as well. You've got a little bit of exhaustion, or you had a couple days ago. You had a little bit of exhaustion. Okay, so as we made this peak, you had force index moving higher. You had the MACD kind of making a half-hearted high down here, but we also broke above contract highs. And so now we've come back down to test them, And look what we've done with these other indicators. We've come straight down into the buy zones. And so I think that this trend is going to continue to get bought, even if we break down and come all the way down and close this gap down at 615, 620. With the weather markets that we have ahead of us and demand raging as hard as it is, you got to assume that that's going to get bought, and it's going to get bought in a big way because we're probably about ready to pull back higher. Now, let's go back to our weekly chart and see if that actually could make sense on a weekly chart as well. Well, sure it can. Look at this little trend channel, right? If you snap from the summer low to the first major pullback, and then you snap it to the intermediate high, look at where we are. We're trading right on the top of this trend. And if we do crawl back above last week's high, above 664 in May, then it really clears the path straight to the old summer highs and then on forward. Well, what would cause that? Well, remember, South America burnt up somewhere around 500 million bushels of corn, maybe more. And certainly there's nothing on the demand side that would suggest that we're decreasing demand. Well, China's not buying. Well, but they are, because our shipments are really, really good. So we're shipping ahead of schedule. I wouldn't pay too much attention to the news headlines there, because I think corn actually looks really, really good. Even though we could reset back here just a little bit, I think that turns into a wonderful buying opportunity on a move back down kind of to the mid-level of this trend channel. So we're going to watch that really, really close. But for today, I think the trepidness is just based on Russia and just saying, hey, do we really want to work higher? Final thing I'm going to show you on corn is the cloud. And we've been talking about this for a long time. The average move when corn breaks out of the weekly cloud is almost $2 a bushel. On average, if you go back as far back as these charts will go, which is back into the 70s, on average, when you break up out of the weekly cloud on corn, it moves a lot, right? Like this last one, that was $4 a bushel right there. So your average move, including all of the little false alarms right back in here, your average move is $2 a bushel. So now, one of the things about cloud analysis is a lot of times this top line, or this fast line on your leading edge on your Kumo, a lot of times it forecasts the direction of price. And so one of the things we could see here is a throwback in line with this slope right here. You can see a throwback and breakout, and then we can bounce up higher and start your move from down in here. It's the same exact look that we had on the daily chart, which comes into closing that gap right down into here at that 622 level, okay? So I think corn could get into a little bit of weakness here, but I think that it's going to be relatively safe down into this midpoint of this channel, which is where we want to really analyze it and look at it hard. But as long as we're above this weekly cloud, I have no interest in getting short that market because of the opportunity that it could possibly resist, right? So even if this is 30, 40 cents right in here, we're willing to give that up in exchange for a $2 plus gain if that analysis holds true. All right, that is a lot on corn. Let's jump to soybeans, because I know everybody's worried about soybeans. Okay, with soybeans, we've got a couple of things to look at. Number one, I want to point out to the fastest turn of events ever, which was last week at this high at 1633. The news flow at the beginning of that day was, oh my God, South America burnt up. We have no more soybeans left on planet Earth, and everybody's super bullish. But by the end of the day, it was unanimous. Every analyst that covers soybeans agreed the top is in. We're good. We're done. We're going lower. And so now we've consolidated for a few days. That is not how a market's going to top at the end of this size of a move. You're not going to have unanimous consent that the top is in, we're going lower. No way. A market's going to die on absolute euphoria. It's not going to die on skepticism. They build on skepticism. They build on that insecurity of people getting caught off balance. So I think that beans are about done with their with this little pullback here. and I think we're getting ready to work itself higher. Let's look at why and look at some different time frames to help analyze that. Okay, first of all, remember with the RSI. RSI is a really popular indicator and something you got to look at a lot. People say, well, when it's overbought, you have to sell it. That's actually not the way that works. When the RSI is over 80, it's really confirming strength. When the RSI dips from 80 back down to 60, 50, 40 into this mid-range, those are entry opportunities. If you look at it here, you wanted to buy the break down in here. If you look at it right here, you wanted to buy the break. You wanted to buy the break. And then when markets are trending lower, you want to sell the rally back to the top if we're able to break down and get into the bearish side of things, which we were really never able to do all summer. That was one of the reasons why we believed that it was a counter trend move, because the oscillators really never confirmed strength into the downtrend. So we would have had to have gotten the RSI down below 20 and held it there consistently in order to say, hey, this market's really going to roll over and trend lower. It never did it. It never did it with the RSI. It never did it with our force index. Force index, I said a couple weeks ago, we're at an all-time, we're at the highest level for force index that we've had. That doesn't mean that we're going to end the trend, but we should reset it. Well, at this point, we're in the process of resetting it. Here's our force index. This was the highest level that we had seen. We've now worked itself down right to the buy zone. In an uptrend, you want to be buying the oscillators when they come and test your zero lines, okay? I can show you this all the way back for as long as you want to see. These are buy setups right down in here. So on your daily chart, I would not roll over and assume that we're going to break a lot lower. And when we look at soybeans on a weekly basis, this is your weekly continuation chart. And I've got this scrolled back so you can see the 2012 high right here at 17.95. Okay, you've seen this massive move work higher. Now, one of the things that we can do is look at our oscillators to establish whether or not we're trending and we're strong. Well, let's put the RSI back up here. We're now back into bull market move. We just got there. If you look at where we were at the beginning of this move, get my crosshairs back on here, sorry. If we look at where we were at the beginning of this move, we first achieved the buy zone up here at in September of 20, and we basically remained into there for all the way through May. We just crawled back into it, confirming the strength of this move, and we're throwing back to the top of it. So I would expect this indicator to remain over into the bull market territory for quite a while, and I would expect this strength on this force index on the weekly chart to confirm additional strength moving forward here for some time as well. A couple other things on soybeans that you can look at from a trend analysis standpoint. How do we know that we're still in an uptrend? Well, if you take your Fibonacci retracements from the beginning of the move to the summer high, you'll see that all we did was come back in. We didn't even get to 61.8% retracement levels. Okay. So if you take that same logic and apply it to this move, we've got a long way down, and we can maintain this bullish count before we go, before it works higher. You can come all the way down to 1462, all the way down lower. One thing about Fibonacci retracements is that if the first move, the first retracement in a large move dips below 50%, then the second retracement will generally be shallower and minimize it. And the reverse is true as well. If the first retracement is shallow, then the second retracement should be deep. So I think that this retracement will actually be short and shallow and fast, as opposed to this one, which was long and deep, okay? So soybeans, I think that we're going to throw people off balance, and we're going to come back in and start buying it and probably push it on up to challenge this high sooner rather than later is what I would expect with soybeans. That's just how the charts are set up. All right, last but not least, I'll do wheat real quick. Wheat is just absolutely sideways, right? There seems to be this consensus in the market that if Russia invades, wheat goes up. If Russia doesn't invade, wheat is oversupplied. And I think that's a silly argument, because Russian news didn't put us where we are. Supply and demand put us where we are, and we still have an entire growing season ahead of us. We don't know how many acres we're going to harvest here. We don't know how many acres we have planted, and we don't know how many what the yield is going to be here in the U.S. There's dryness in other wheat growing areas, like in Africa, and there's demand that's pushing up. That's all incidental to the inflation trade, which hasn't even really started to impact food prices. So I think wheat's going to continue to be well supported. I think this consolidation favors continuation of the larger move, and I don't see anything that's there to change that argument. Even though we're seeing these giant swings based off of headlines coming from Russia. All right, that is 20 minutes. I hope that was helpful. We're going to watch it really closely. There is a lot going on here. Kind of last thing, big picture, I do think it makes sense that if weather turns good in South America for corn and we have a big planting number and we think that we're going to grow another big crop, I do think that we're going to peak corn out at some point. I don't think it's today, but I think somewhere between now and June 15th or July 15th, I think that next big rally's probably got to get sold. But what bothers me the most is that that's almost a unanimous consensus. Whenever there's a unanimous consensus, it just doesn't seem like everyone's going to be right. It seems like most people are going to be wrong, and so that means that it's likely going to go further than we think it should, or it'll happen faster than we think it should. So I think we just got to stay on our toes, keep our wits about us, and I promise that we will watch it closely and let you know of any prolonged weakness or chart damage that we see, and we'll keep you apprised of the news as well. I want to remind everybody that there is significant risk in trading futures and options, and you should only do so in light of your own financial condition. I hope you guys have a great week. If you need anything or have questions, please reach out and call us. We are happy to help talk you through anything that's on your mind. We'll talk to you next week.